Well, hello everybody, and welcome to this week's weekly wrap. And there's four people on the screen today. God, we are lucky this morning. Mecca, how you going, buddy?
Going really well. Another Friday, another weekly wrap. Plenty to talk about today. Plenty going on, not just in Australia, but definitely around the world. So it's all happening.
No, you're absolutely right there, mate. You're absolutely right. There is a lot going on. And what about you, Pat? How are you, buddy?
Yeah, happy Friday. Another week in the barrel. So looking forward to the weekend, which will be good.
Another week in the barrel. I do like that. That's a nice way. That's a nice way to summarize the week, I think. And what about you, Anthony? How you going, bud?
Good, Luke. Yeah, been busy. There's plenty going on. Yeah, it's glad it's Friday.
Looking a bit dapper there in your salmon shirt there, bud.
Move on.
Move on. Okay, I just thought I'd say it. That's all. Mirko, it has been a cracking week this week. We've seen all types of conniptions on markets. I think the Nasdaq is down 5. Bitcoin has gone to gone to smithereens, and there's been a bit of stress out there. And we've actually had an interest rate rise, mate. Do you want to give us a bit of a summary?
Yeah, when I said it's all been happening, it's certainly all been happening. And I'm just about to plug this number into my computer because it's 10 past 10 and the All Ords is down 1.49% right now as we speak, which means that for the week, let's have a look here, we are now, minus 1.6 for the week. So it's been all over the shop. We started the week with a -1. We're up about, nearly 2 for the next 2 days, then off, then up 1.5, and then away we go again. So, it's been pretty wild ride. In Australia in particular, we did have the Reserve Bank meet in February, and much to the disappointment of a lot of mortgage holders, interest rates were actually raised. So the official rate now is up 25 basis points to 3.85. So looking at some of the high level points that were made by the board and Michelle Bullock, first rate rise since November 23. It's a bit of a surprise move by the RBA, surprise in the sense that around the world, this is not what has actually been happening. And if I can entertain you guys, I've actually got a chart. Let's just have a quick look at that. Share my screen. There we go. So this chart here shows you how Australia has actually become an outlier. Now, we're usually an outlier because we're a little island in the middle of nowhere. But this time around, we've actually been an outlier when it comes to monetary policy. And as you can see here on this chart, the Australia there in red is pretty much the only developed market that is actually tightening interest rates. As you can see, the rest of the major developed countries in the world are actually in an easing cycle. So, as a result of what's happened here, and people will argue, did we raise rates too little when we did, and therefore inflation didn't come under check. So that debate is going on now, but it does look a little bit odd. This has got remnants of the GFC when the rest of the world was furiously cutting rates, and we're actually raising them then. If you recall, there was still term deposits at 7 and 8% back in the day, and the rest of the world was cutting. So, look, the news from the board was pretty much that they blamed it on individual consumer spending. Right, and Jim Chalmers was very quick to point out that to say, did you notice that they didn't blame us, as in the government? It's not our fault. It's not our fiscal issue. I think Michelle Bullock went a little bit light on the government, in truth, and as a result, the brunt of the blame is being held at individual level. But nonetheless, I think that at a fiscal level, we've got some stuff to answer for now. In terms of performance in the US, as it stands with four nights of trading done, S&P's off 2% and the Nasdaq is off nearly 4%. There has been a significant pivot from the tech sector into what I always call Fed income stocks that aren't overvalued and the like. So I think we're going to see a bit of that trend continuing.
No, look, Mick, always entertaining. Thank you for that. look, just on the interest rate piece, I guess from that point of view, and I take on board what you said about Jim Chalmers and Michelle Bullock. She did go light on the government, I thought. She made a point of saying it wasn't those sort of factors, but it was more around the private sector and individuals. And I think, Pat, you might have raised an interesting point where you said it was the Barmy Army that caused this.
And that's what Channel 7 was running with. They were basically saying the Barmy Army, the amount of drinking they did increased inflation. But if you talk to the opposition, they're saying it's government spending. So I don't know. There's the view of it sort of saying, I think the RBA is not trying to hurt homeowners, but they're basically not giving any sympathy cards either. So yeah, it's who's at fault? Who knows?
Yeah,
but no one's taking blame.
Well, look, I must admit, I did see Jim Chalmers, but he was very much like a bull when he came out and said, I think his first opening line on after the interest rates had gone up was that the independent Reserve Bank had raised interest rates. So it's got nothing to do with government, it's independent. So that was the first point. And then the second point, he went to great lengths to explain that it wasn't government caused, but it was actually caused by consumers and businesses now taking the lead. And Anthony, I'll come back to you on that point because you obviously work with a lot of businesses, as we all do, and I'll be interested in your view on that. But if you think about what Jim Chalmers is saying, the point that he was saying was the government hasn't caused this because we haven't given any bonuses. We haven't given any like one-off hits or whatever from that point of view. So you can't blame us on that. And I'll agree with that because they haven't. There's no like one-off bonuses that they've handed out like $1,000 or $2,000 for people to go and spend just for the hell of it. But what he's ignored is the amount of spending that's already inbuilt in the system. So the stuff that we're giving into the NDIS, the stuff that we're doing from that point of view, and the amount of waste that happens in the public service and all that kind of stuff from that end, the mind boggles when you sit back and you think it takes $350,000 to build, a bin, for God's sake. It's stupidity at its finest. And these are the kinds of things that add to the inflationary pressures. And I don't think I think Michelle Bullock went a little bit light on because I think had she challenged Jim Chalmers and the Labor government on that point, I think there's a fair case to say that the government has also contributed to the inflationary pressure, which is interesting. And getting back to that original point, do you think businesses are responsible? Are you seeing an uptick in business spending? From what you're seeing out there, is there a buoyancy there, or is it very much typically business to business, industry to industry?
Yeah, I think, and it's probably since COVID, it's businesses are not. They're not flushed with cash and spending like they used to. A lot of people are trying to run leaner. They're more aware of their margins, more aware of their bottom line. And yeah, now I don't know whether that's within our existing client base or generally, but I don't think that people are going out and buying the three Mercedes, one for mum, one for dad, and one for the daughter, like they used to in a pre-COVID world when money was available. So I think it's definitely tightened up. This is not to say the business isn't making money, but the comment I always make is generally in niche businesses, they'll operate well, but niche businesses know their markets and effectively know that they can produce good results by being smart about the way in which they conduct business. It's those that term we used to use was used to get fat and lazy and effectively just think it was going to roll in and spend it as you like. And effectively at the end of the day, they're the ones that are knocking on the door of the insolvency practitioners at some point.
Yeah, no, fair point too. I'm curious about Bitcoin, and we don't often talk about Bitcoin because, in fact, I think the four people on this screen don't understand it. In truth, given that it's not something that's backed by legislative instruments or whatever. From that point of view, it seems to be very much a tulip type experience. But we'll leave that for other people to argue. But the Bitcoin price at a 52-week high was 126,000 US, and today got down to a low of 62,473. So it's touching its low points. And if we look at the last 6 months in particular, it's down about 44%. Is this now? The interesting thing is Bitcoin was designed around the point when there was instability in the market. It was going to be the protector. So if inflation bit, it was going to be the protector. If there was instability geopolitically, it was going to be the protector. It has done absolutely everything opposite to it. I'm just intrigued from, just from your points of view is, do you think, is this the end of Bitcoin, or is this the repricing where what we saw was market exuberance driving something and it's coming back to a more realistic level? What's your views, gentlemen? I'll go to you first, Mick, as an example.
Thanks for doing that, mate. I appreciate it. Look, my take on this is exactly what you signed up for, as far as any sort of cryptocurrency investment is concerned, and there are certainly investors there that treat it as an asset class, as a diversifier in their portfolios, and there's certainly money to be made. But you are certainly, when you sign off on one of those crypto platforms to actually buy some of this stuff, it's very much should come with a warning of strap your seatbelt on, because it's going to be a bit of a wild ride. And like you said, I think you said the high was $126,000. The reality is that somebody bought it at that price. Yeah, there's always a buy and a sell in the market, and that same person, if they're holding today, is sitting there saying, "Gee, I've just halved the value of my capital that I outlaid there." But on the flip side, it works the other way as well. So I think common sense needs to prevail here in the investment scape. I personally see it as a very speculative type investment from that perspective. It's not what I deem the serious money investment, of your overall wealth from that perspective. But you just need to be. I think the same thing applies. Will it bounce back from here? Look, it probably will. It's probably one announcement away from the Trump administration about something, and this thing that bounces back, right? We know how it works, but it is certainly very volatile and entertaining, to say the least. Yeah.
Mecca, are you suggesting that Donald Trump could be doing something for his own benefit rather than everybody else?
No, he might be bored. He might be bored after the third bottle of wine tonight, and on what's his media platform, Truth Social. He might just punch out a tweet, and or whatever they call it on Truth Social, and anything could happen next.
Well, mate, one thing I can tell you, he doesn't drink wine. He's a Diet Coke fan, so he'll probably be on his third can of Diet Coke, mate.
It's probably all that. It's probably all that fake sugar that he's drinking fake sugar.
True. What about yourself, Pat? What are you thinking of Bitcoin at the moment? Like, and just throwing on that, gold and silver, which has also had a massive run, they've also had a massive pullback. From an investment fundamental point of view, and we work with clients on this space. Is this something? Is this something that from a client's is this a client beware response, or what's your view?
I think with crypto, I don't think it's the end of crypto. I think the pure market cap of it's not going to go away. Yes, valuations come down, so maybe like Mirko was saying, it's you bought what you got. But whenever you talk to a crypto investor, it's they have strong conviction, but very short memories. So it wasn't long ago where everyone was buying those NFTs through crypto of the Bored Apes and all these kind of pictures, and no one talks about them anymore, and the valuations are basically worth nothing. But like you said, gold was always a safe haven of time of stress, and crypto was supposed to eventually replace that. That's what they thought. So, the world isn't a time of stress, but those safe havens aren't really playing out at the moment.
Absolutely. Anthony, you an investor in crypto, mate, or?
Yeah, I have a very small interest on the basis of some people who said I should be involved, and I'm just watching it. So a particular ETF closed at 2046 overnight. The market's just open. We're 22 minutes in. It's down 9% already.
Wow.
That's on the back of 50% and drop in the last 6 months.
Yeah.
So, yeah, I think, as you said, as Mick said, this is what you signed up for. It's not something I look at every day. Can't even remember the code of it. So
yeah,
it's
probably a good thing.
Just your therapist your therapist told you not to log in every day. That was it.
I don't get it, but it's. You got to remember this particular ETF. It's only been going 18 months. It's back to the price it was then. So, and it had actually gone 2.5 times in that period to its peak. It's back to where it was 18 months ago. So, it is a bumpy ride.
I think it's one of those things, and I think what people don't really appreciate is how much leverage is in the system. So that's probably the biggest fear here, is if people have gone out and they fundamentally believe in crypto or whatever they've done, and they've gone and borrowed monies. So now they've invested borrowed money, so monies that isn't theirs. So not only have they lost that money that isn't theirs, but they now have to repay it. So if they're on the margin loans on those sort of things, there could be some chaos there, because when you start to have market corrections or valuation corrections of 50%, that pretty much wipes out your margin. You don't have any margin. You're now at zero. So that's that's going to be the interesting one in terms of how that plays out. Now, Mirko, there was an interesting article in the Fin Review this week in terms of industry funds leaking money, and a lot of money moving around in that space. And not that it matters, because we do know that industry funds are highly liquid and all that kind of stuff, so we don't want to alarm people from that end, but they do have a lot of exposures to illiquid assets and unlisted assets from that point of view. And when money is moving around, so if like 5% of Australian super's money is moving to some other super fund, and likewise they're moving between each other, that can cause a fair degree of stress, can't it?
Yeah, look, I think it will certainly cause the portfolio managers to sort of have a look at their strategies and make sure that their liquidities are on par and may actually influence their longer term holdings as well. So, one of the benefits of the big industry funds is that the inflows are so huge because of our mandatory SG contributions. The inflows are huge, so you can sort of pretty much bank on a huge wave of money hitting the account. And now with the way that superannuation needs to be paid on a far more regular basis, there's a steady stream of cash coming there, so you can allocate that capital. But once you start seeing those movements, I think you're spot on there. I think the likes of Australian Super, Australian Retirement Trust, where Super had somewhere between 5-6% of movement of monies out of the fund. All of a sudden, as a portfolio manager, you need to be very cautious of what you're holding and what you can get out of. And remember, some of these guys are so big that even getting out of the usual stock in Australia, that is T+2 days, you get your settlement back. You cannot sell some of their positions. They're so big, because forget about hurting the market. They actually hurt themselves. They hurt their members, because they will take such a haircut. So I think that this was part of the government legislation about having the big scorecard of which fund is performing the best and being transparent and all that. Well, I think that sometimes you can actually create a problem in itself, because people if you're moving from one industry fund to the other, and I've had discussions with some of these CIOs there, and when it's all said and done, there is no real competitive advantage. They're just trying not to get outdone by each other. And so you're talking around the edges there, yeah. So, but interesting times for them, and I will very much pay close attention to the portfolio updates that we have access to, that sort of give us a bit of an insight as to what their investment committees are saying.
Absolutely. Gentlemen, I've also noticed that vacancy rates in Melbourne have now hit 19.1% in the city of Melbourne, which is bizarre when we start to think about office vacancies. We work in the city, we go there often, we meet with clients, we meet with colleagues, we meet with strategic partners, we do all those sorts of things. And when you do go into the city at the moment, just interested, Pat, Anthony, in your views from that point of view, does the city feel dead? Does the city feel like it's dying? And if you were the Lord Mayor, which you probably do a far better job than the one we've currently got, but we'll leave that separately. Sorry, Nick, from that point of view. But if you were the mayor, what would you do to rectify the city back and bring it back to life outside of the tennis and Grand Prix?
I don't think the CBD is dead. I think it's just going through an identity crisis at the moment. I think the Lord Mayor really needs to push industry back into the CBD, because you can't just sit on your laurels and let a protest every week dominate the city. So the mayor has to be bringing some more points.
Yeah,
bring office back, and it starts with them. They're still working from home, most of the council officers. So that has to change.
Well, council and state government too. So the government's still responsible for all this. What's your view? Ant?
Yeah, but I think that's right in terms of private enterprise as well. Like, I do a lot of tax returns for clients, and the volume of work from home hours that they're indicating they're doing on a weekly basis it's generally 3 to 4 days a week working from home. And I'm talking about high-level employees in big corporates that are not required to attend the office any more than a day a week. It is bizarre. So it's the way technology is nowadays. And if you look at these corporates and their responsibility to shareholders, why have an office with 10,000 square metres if you only need 1/10 of that because everyone's at home? Yes, it's impacting the CBD, but the flip side of that is, I tell you what, you go into town, it's hard to get a car park.
Yeah.
So
You're right.
they mightn't be working in there, but they might all be living in there.
Yeah, no, you're right. You're right. Look, I think the thing that worries me here is 19.1% of office space being available. Clearly there's two parts to it. Obviously, corporates are looking to downsize their footprint because there's no point paying for rent if you don't need it. From that point of view, people are working from home, and that's a change. I think the second issue there is too, what does it mean for the property market in Melbourne, generally speaking? Because these buildings are fit for purpose. They can't just now be converted from office space into accommodation. They can't. So what happens in that space? The other thing there too is, I guess, from that point of view is, like if we look at other areas, and we were in Brisbane only last week, the three of us, Pat, you missed out, unfortunately, you can go next time, but we were in Brisbane from that point of view, and Brisbane seemed like it was booming. You go to Sydney and the office space seems like it's booming. People, the buildings are full, people are moving around and all that kind of stuff. Mirko, you travel a lot interstate from that point of view. Have you noticed a disparity between Melbourne and the rest of the country?
Without question, and I was actually in the Melbourne CBD this morning for a 7:30, and I did get a car park, Anth. I think I don't even know if the trades if the building sites have returned since Christmas. Did they actually come back before Easter? I'm not sure, but I did jag one. There was no queue to get the coffee. I said, "Bit quiet, mate," and chit chatting to the barista there, and he's like, "Oh, mate, Fridays and nothing happens around here." And it was definitely a bit of a ghost town, and I'm of the view that it's actually a real concern for the city and for the vibe of the city and the like. I mean, what do those poor cafe owners do? Yeah, they're paying the same rents that they were, historically, and just getting foot traffic through those places is incredible. I went up to the 16th floor of a building in there, and there was no hold your backpack in front of you so you don't take up too much lift space. There was no one in the bloody lift. It was just me. It's like so. I don't know. I'm not liking what I see, and and we have a state government that's still working on legislation. Which reading between the lines as a business owner is telling us how to run our businesses as opposed to governing. So I have real concerns about what happens there and the larger ramifications, on the listed and unlisted property sector as well there.
Yeah. Okay. No. Thanks for that. Thanks for that, James. And I guess and just mindful of time too, it would be remiss of us not to talk. And you'll notice that we try to ignore what's happening in the United States because I just think we've had enough of the clown show for a while. But I want to focus in on the Australian political system at the moment and what is going on at a conservative level in this country, and the fact that we're oppositionless at this particular moment in time in terms of that. Does this give the Labor Party carte blanche to do whatever it wants? And I guess by extension of that, we've noticed this week there's been a lot of articles and a lot of discussions around intergenerational wealth and the unfairness and the budget constraints and all these sorts of things. And there's been a big move around that CGT piece where today capital gains discount 50%. And I suspect that there's going to be something here where we might see the capital gains discount get reduced. Anthony, you're a tax man in this space. What's your view, buddy?
I think it's probably similar to franking credit removals of the past and a number of things that the government at the time has thrown up. I think it would be pretty gutsy if they did. I would be pretty confident that if it was changed, it would be grandfathered so that it would only apply to any assets purchased post the announcement. I think it would be it'd be an administrative nightmare to effectively handle a pre and post scenario. And effectively assets that have been held for some time wouldn't fall into the new regime, I wouldn't think. So there was chat that it was only going to apply to property. I know Pat was mentioning that yesterday. I can't see how they can isolate that. It's all in for me if they're going to do it. When it was introduced, I think 2000 was pretty generous. A lot of people have taken advantage of that through time. So, yeah, look, it's something that I think I wouldn't say that it's completely off the table, but it's a big move, like when they were talking about franking credits a few years back.
No, Pat, you're of a similar view there, I dare say, yeah.
Yeah. You look at what happened to Bill Shorten. He took that to an election with the franking credits and the negative gearing. How's that working out for him? I know he's a chancellor at a university. He gets a pretty good wage, but pretty sure he wanted to really be the Prime Minister of Australia. So if they take it to an election, I don't know if Labor will stay, but whenever you try and change a big tax legislation like that, heads will roll.
Yeah.
So,
yeah, Mirko, are you of the similar view there? Do you
look at what's the thing? If it walks like a duck, it's probably a duck. I think the fact that we're hearing murmurs about capital gains tax, this is the new way that we get a little bit of feedback by just sort of drip feeding these stories out to see how the market reacts. And I think your point is interesting, Luke, that mix it in with the intergenerational unfairness and the like, and you know what, maybe you get it over the line. And look, fortunately for the Labor Party at the moment, there's probably not much they couldn't introduce without getting it over the line, because there is no opposition. And which sort of leads me to think, with what's going on with the opposition at the moment, Pauline Hanson's One Nation Party, and given that the Winter Olympics are kicking off tomorrow morning, they could in fact do a Stephen Bradbury at the next election, One Nation. So watch this space, because by sitting back and doing nothing, letting these guys implode, they might just slide into a position of some pretty significant strength.
Yeah, look, I think, and thank you for all your feedbacks there and your opinions. I take a little bit of a different slant. I reckon. I think I agree with you both that it's brave, with all of you, that it's brave to do so and make these changes. But I do think if you're going to make these changes, you'd want to do it in year one of your election. So this is their first budget after the last election from that point of view. So they've got 2 more years or 2 more budgets to get through. So you can make people really angry in year one, and then they kind of forget from that end. And I think the guys of intergenerational planning, I think, is a masterstroke or clever, because it just allows them to say, actually, we're just doing it for fairness. We're just doing it for these reasons. I do think, and Anthony, I listened to you speak there where you were saying the various components and grandfathering. I don't think they'll do that, actually. I think they'll just go down the approach of just reducing the discount. So I think the discount will go from a 50 perhaps to a 25, perhaps to a 20. And I do think that there might be some indexing brought back into it from that point of view, because I think 20% doesn't capture the indexing of inflation over time. So I think there'll need to be that. So that's where the complexity might come in. But I think if they try to grandfather and all that kind of stuff, this will just be a mess. And that notion, Pat, of just it's going to be property specific. Like if you want to destroy an asset sector and enhance another one, that's the stupid things you do. That's whoever thought of that brainwave should bury their head in the sand and go, I don't talk anymore, because that's just dumb. But look, invariably that's Canberra, and there's a lot of, I think since they've legalised drugs in Canberra, this happens a lot. So we just got to slow down a bit and go, calm down, people, from that point of view. As for the opposition, bloody hell, how bad is it? Like we can't even, I thought Victoria was a basket case. Now we've gone national. How good are we?
Opposition going real well.
Yeah.
I was going to say, when Pauline Hanson's got a better approval rating than Albanese, I think the country's in a bit of dire straits.
I think I said to you yesterday, Pat, I reckon a brick would have a better approval rating, mate. So let's be polite there. Has anybody used the tunnel yet?
I can't find it. I can't find it. I've tried twice now and ended up on an old road. It's probably a good thing. I've saved money in tolls.
Fair enough too. Look, if you do use the tunnel now, unfortunately the freebies have been removed and you will have to remortgage your house. Proudly sponsored by the Victorian Labor government, that was. So I'll just let you know. Gentlemen, beautiful weekend coming up. Nick, you got anything exciting planned? You in the garden? What are you doing, bud?
Yeah, the lawn is well overdue. I use the excuse scorching heat, don't want to cut it, but no, I think I do. Unfortunately, I need to do a bit of work.
Nice stuff. And Paddy, I believe you're going camping with the little one, mate.
Yeah, just taking the young guy camping with a couple of friends. So we're going up to near Eildon. So we'll see how the bushfires really affected the area.
Nice. And what is, just so I get this right, it's dads and their sons, is that right?
Correct, yeah.
Oh,
Get them out of their comfort zone.
So what stays on tour is just not spoken about.
Exactly.
Absolutely, absolutely. And Anthony, you're on the bowls, you're on the greens?
Yeah, tonight and Sunday, rest day Saturday, and probably like Mick, if the weather's okay, the lawnmower might get a run. But
Okay,
yeah, looking forward to a relaxing Saturday.
I would have thought, and guaranteed wins, I dare say, for Friday and Sunday, yeah?
Yeah.
Oh,
I like a
nice.
bit of confidence.
Nice, I
good.
do like that.
What are you doing, Luke? What's on the scorecard for you?
We've got a wedding tomorrow. A dear friend, their daughter is getting married, which is wonderful. So to Alana, wishing her all the very best. And then on Sunday, we are celebrating with the family. My darling wife had another year around the sun, or another lap around the sun, as we like to say. So we'll be celebrating her birthday and toasting her success for another year, which is kind of cool. So just nice and casual. And if I can mow the lawn somewhere in between, that'll be a bonus as well, let me tell you.
Happy birthday, Mandy. I hope you got sport rotten.
I dare say she did, mate. I dare say. But thank you for that. All right. To all of you, thank you very much. Thank you for joining me today. To our wonderful team here at Innate Wealth, thank you for all the work that you do. Incredible, awesome, fantastic as always. And to our lovely clients out there, have a cracking weekend. I think the weather is going to be fantastic. A nice rosé, a nice Chardonnay, or a beer or two. They always work really well. So enjoy, take care, speak soon.
Hey, guys.